Hello and good morning. This is Traders Next Door. I'm Edgar Katashabe, and you're about to hear the Daily Scoop. Well, with the month of October nearing a close and November coming in hot, we have one of the most anticipated data sets coming out this Friday, and it is NFP. So we have quite an interesting line of data in lead up to that. We have JOLTS job openings coming out on later today. We have ADP coming out on Wednesday, and we have unemployment claims coming out on the Thursday, and the week rounding off with Big Daddy NFP. So this week is all about the labor market, and all of these data sets that come out before NFP are going to give us a little bit of a clue on what to expect during NFP. NFP is the one that's a little bit more anticipated, the one traders love to trade most. And the data sets that are leading up to it, they can give us a little bit of a clue as to what to expect. So looking at JOLTS, which stands for Job Openings and Labor Turnover Survey, this gives us an insight into the current labor demand. Basically what we're looking at is measuring the number of listings and openings of new jobs available in the market. And you can see how if job openings are high, this suggests that businesses are looking to expand their operations. So this can later translate into greater job creation, which will then be represented in NFP. So you can see how JOLTS can be used as a pre-indicator of what NFP is going to look at. If high openings are available, more jobs have been created, this suggests that the labor market is looking strong, labor market is growing, and this is going to result in a higher NFP print. Subsequently, if job openings are low, there's a possible slowdown in the market, this is going to lead to a lower NFP print. So that is how JOLTS and NFP are somewhat related to each other. Looking at ADP. ADP gives us a preview of what NFP is going to do, at least half of what NFP is. ADP looks at the private sector in terms of jobs, whereas NFP looks at both private and government jobs. So there are differences in the methodology at which these figures are collected. There's differences in the sample sizes. So there isn't a perfect correlation. There isn't a perfect one-to-one between the ADP and the NFP, but they are essentially measuring the same thing, just one in the private sector, one in both government and private. So they do have quite a strong correlation between each other and can be used as predictors of each other. So with ADP coming out first, this can give potential insights as to what NFP is going to do. Now, looking at unemployment claims. Unemployment claims reports how many people are filing for unemployment for the first time. And you can see how if people are filing for unemployment, that means they are not currently in jobs, meaning that the number of jobs added might be on the slowdown. If you do get random spikes that can happen due to seasonal changes, random one-off events, and these aren't necessarily predictors of anything, but trends that last several weeks or months can give you quite a big indication as to what is happening in the labor market. If unemployment claims are on a steady incline, steady increase over the next couple weeks, that does suggest that if this many people are filing for unemployment, they are not currently working in jobs. So what happened to their jobs? Were their jobs closed? Are job openings falling? Are general job creation on the decline? And inversely, a similar situation. If less and less people are filing for unemployment, that means jobs might be on the increase, more people are being employed, more jobs are being created, and thus you can expect a higher NFP print at the end of all that. So you can see how all of these different data sets do relate to one another. Now, again, they are measuring slightly different things with slightly different methodologies, slightly different sample sizes, so the correlations are never going to be a perfect one-to-one. Also, the data sets that come out in the same week, so this week's ADP, this week's unemployment, this week's job openings, don't necessarily represent what this week's NFP print are going to look at. You need to look at the data sets that have come out in the last several weeks and months and use those to form a thesis as to what NFP is going to do. Now, this can be tricky. NFP is its own data set. It has its own methodology, its own sampling size, its own way of coming out. So all of these data sets can lead one way while NFP drives in a completely different direction. But over the long term, these correlations do hold steady and can provide some benefit. Now, of course, none of this is financial advice. You're going to have to figure out for yourself how these data sets are going to formulate your own thesis and what you're going to do on the day, but they can be valuable tools in the arsenal to help figure out how to get on the right side of price. Now, if you would like to trade with some experts who are a little bit better at analyzing than you are probably, you can look at joining Project G. They are, you can find them in the description down below. They're gonna help you formulate your thesis. Again, not financial advice. They're gonna help you formulate a thesis that you yourself are going to have to confirm and act upon, but they can help collect all the data sets for you and help modify what your thesis could look like. If you want to take advantage of that, you can use the code in the corner above, FISA, for 35% off a Vault Funder Challenge. Use that to trade NFP, maybe get some potential massive returns. This has been Traders Next Door. I've been Edgar Kadashabe, and you have just heard the Daily Scoop.